Hi, I'm Gary from Westwood Estate Planning. Are you looking for a legitimate way to reduce your inheritance tax bill? Perhaps you have a regular income that exceeds your everyday living expenses, and you'd like to help your family now rather than waiting until you've passed away. Well, in this video, I'm going to explain a powerful, often overlooked inheritance tax exemption: gifts from surplus income. By the end, you'll understand exactly how this exemption works, the 3 conditions you must meet, and crucially, what records you need to keep to make sure it actually works when the time comes. So let's get straight to it. The gifts from surplus income exemption is found in Section 21 of the Inheritance Tax Act 1984. And what makes this exemption particularly valuable is there's no upper limit on the amount you can gift, unlike that £3,000 annual exemption or the £250 small gift exemption. So here's what makes it so powerful. Gifts made under this rule are immediately exempt from inheritance tax. So there's no 7-year waiting period like other substantial gifts. If you pass away the day after making the gift, it's still outside your estate for inheritance tax or IHT purposes, provided you've met the conditions correctly. This is a legitimate way to pass your wealth to loved ones during your lifetime, reducing the size of your taxable estate and potentially saving your family a significant 40% tax bill on those assets. So for a gift to qualify under this exemption, you must satisfy 3 conditions. HMRC will examine these carefully, so understanding them properly is crucial. So first up, the gifts must come from your income, not your capital. This means money from your pension, salary, dividends, rental income, or interest after tax. It cannot be from your savings or from selling assets like your property or some investments. The key word here is surplus. It's what's left over after you've paid for your normal living expenses. So your bills, holidays, hobbies, everything that maintains your usual standard of living. So number 2, the gifts must be regular, kind of in the name. They need to form a habitual pattern, not just be one-off payments when you feel like it. This could mean monthly, quarterly, or annual gifts. The amounts don't have to be identical each time, but there must be a clear pattern showing your intention to make these gifts on an ongoing basis. HMRC looks for evidence of habit and intent. And number 3, this is crucial. The gifts must not reduce your standard of living. After making these gifts, you must still have enough income to maintain your usual lifestyle without any financial constraint or needing to dip into your savings. If these gifts leave you short and you have to cut back on things you'd normally spend money on, they won't qualify for the exemption. It's about genuine surplus, not stretching yourself thin. And one important point here, it's your executors, the people who are sorting out your estate, who will claim this exemption after your death using Form IHT 403. And that's why this next section is also crucial. So keeping records, and this is where many people fall down. You can meet all 3 conditions perfectly, but if you can't prove it, the exemption won't be allowed. Your executors will need clear, documented evidence that you met all 3 conditions throughout the period you were making gifts. This means that you need to maintain detailed records of your income from all sources after tax and your regular expenditure, what it actually costs you to maintain your lifestyle, and then lastly, every gift you make under this exemption, including the date, the amount of the gift, and the recipient. I strongly recommend keeping these records in a simple spreadsheet or a dedicated system and maintaining them for as long as you're making the gifts. Keep at least 7 years worth of records, or until death if sooner. So common uses for this exemption include regular contributions to, say, grandchildren's school fees, helping adult children with living costs, or making regular payments towards a house deposit for younger family members. Done properly with good record keeping, this exemption is an excellent way to reduce your inheritance tax liability while providing real financial support to your loved ones during your lifetime. So, if you're considering making gifts from your surplus income or want to explore how to plan effectively for inheritance tax to protect your family's future, click the link in the description below to book your free 15-minute, no obligation chat with us. It's an opportunity to gain plain answers and understand on how to make your estate planning work for you and your loved ones. So thank you for watching this video. I'm Gary from Westwood Estate Planning, help you protect your future and your loved ones. Now, if you found this video helpful, please give it a like. It really helps other people find this information. We publish educational videos like this every Thursday, so please stay subscribed to keep yourself updated with practical estate planning guidance, and see you in the next video.